Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the non-farm payrolls number came in today showing a surprising gain of 467,000 jobs. There were big upward revisions to both November and December as well. Makes you wonder how they could get the number so wrong. The expectation was only for 150,000, and that's on top of the ADP report, which is a private sector report, that was showing an expectation of a 300,000 loss in jobs. Kind of smells of political manipulation to me, but I think the government should be careful what they wish for. With this new hawkish Fed, we could be moving into an environment where good news is actually bad news. Interest rates on the 10-year exploded to the upside today. We're getting awfully close to that 2% level on the 10-year that I think could be concerning for the market. Bitcoin jumped back above 40,000, but can it stay there? Let's take a look at the charts. At the time of this recording, it is 10 p.m. on Friday evening, and the futures market is currently closed. The market closed the day right at that 450 level that we've been talking about as a support resistance level. You can see it right through here. And in addition to that, if we take that line off, you can see that we also closed just above the 10-day moving average. Now, in the last recording, talked about how really didn't think the selling was over because we hadn't had a panic type spike in the VIX. Well, the following Monday certainly took care of that with the VIX spiking up towards 40 and then the low reversing after breaking below that 430 level. But at no point did we close below 430, so that acted as support as we thought it might. So now we're kind of in this in-between area between 430 and 450. Or are we? You're going to see a common theme through the major markets as I go through the rest of the charts, and that theme is zigzag. All of the major indices are in qualified downward zigzag patterns. So you take a look at the SPY, there's our B wave correction, and the 100% extension would bring us all the way down to 400. Do you remember what that 400 level was key, or what was key about that 400 level in addition to being a round number? Remember, that's where this gap lies, all the way back from the very beginning of April. We talked about that in the past, that at some point in time that was going to get filled. Is it going to get filled on this move? Well, we'll certainly have to wait and see, but we have to respect this qualified zigzag. Then we take a look at the Dow on the diamonds. There's a zigzag there as well. Same thing with the B wave. All these are right at the 61.8% corrective level on these B wave corrective moves. And so on the diamonds, that brings us down to about 320, which is a level we had talked about for potential long-term support if the market were to make it down that far. Take a look at the Qs. The Qs are a little more complicated on its zigzag pattern. The A wave has its own zigzag, which means that zigzag pattern becomes a complex A wave. Note the extension went all the way down to 161.8 before bouncing up. So then when we take a look at the larger pattern, again, that A wave is complex. The B wave was a mono, jumping up to the 50% level. Didn't quite make it to 61.8, but still a very nice qualified zigzag pattern with the C wave extension down around 300, as we said. So even though these numbers look like, wow, those were pretty big moves to the downside, still have to respect the fact that all the major indices are in qualified zigzag patterns. Not sure I can remember seeing that to where they were all lined up. Remember, we've had this discombobulation, if you will, of the markets where they hadn't been kind of in sync with each other, but now they're perfectly in sync. Here's that 10-year that I talked about, jumping to the upside here. A big move in last night's insiders meeting, which is a meeting we have for our alert subscribers at Elliott Wave Options, EWOtrader.com. Here is our symmetrical triangle, and there was the breakout. So we were talking about whether or not we would get the breakout from that triangle. Well, we didn't have to wait very long to find out. We did today get that big move to the upside. Curious as to what your thoughts are on interest rates. We haven't talked about that a whole lot, is asking your opinion. I've been on the record by saying that I think if the 10-year goes to 2%, the market could struggle with that. What are your thoughts? Leave a comment underneath the video as to whether or not you think the market can handle a 2+ rate on the 10-year. And then taking a look at the dollar, to me this is one of the most concerning things that's existing in the market at this point in time. Why is the dollar moving down like this? In my mind, that indicates global weakness. And if we lose the dollar, we've talked about this before, we have a whole lot of problems going on around the globe. So I'm a little bit surprised that we only got the 38.2% fib extension out of the dollar, and now we're coming back down to retrace that 5-wave impulse, which that's what happens when a 5-wave ends. You go back to the previous 4. I'd like to see that area hold and see some strength in the dollar. Don't necessarily want it to come from war going on between Russia and the Ukraine, but I would like to see some more support coming in for the dollar. To me, that's the one thing that isn't in sync and doesn't make a lot of sense. Now, there was some speculation or commentary today that came out. Let's go ahead and take a look at a chart of oil through the USO. Oil is now above $90 a barrel, and an interesting tidbit is the fact that we've never had oil reach $100 a barrel where we didn't move into a recession. Every time oil's gone to $100 a barrel, it's created a recession. Is that what the dollar is forecasting? Very well could be. But you could see this gap up. Perhaps we get a little bit of a rest here, but certainly if things do heat up over between Russia and Ukraine, you're going to see the oil spike even higher than it is already. So let's look at some things that could be considered a little bit more bullish in the markets. One of those being Bitcoin. You can see that Bitcoin back above 40,000, which is key. We were talking about this in our TradeFinder meeting on Tuesday nights. And by the way, if you haven't signed up for TradeFinder yet, I invite you to do so. It's free. Every Tuesday night we talk about the markets, we look for trade considerations, etc. It's a lot of fun. You can sign up right underneath this video or go to our website at ewotrader.com. But taking a look at Bitcoin, we talked about how the longer it stayed above this 36,000 level, the better chance we had of creating an upward bounce, even if it's just that wave 4 corrective move to the upside. And then we did tip our toes in the water, if you will, down towards 32,000. We said that if we got down there, that really needed to hold. Well, we just looked at it and then jumped back above 36,000. So if we get up to this 48,000, we can reevaluate there. Perhaps it's just labeling that wave 4 and an upward corrective move before moving lower. But again, we'll reevaluate the charts if we can make it that far. And another thing that I think could be considered bullish is the VIX. Well, there was that spike above 40. We talked about the last recording that we hadn't had. We've had it now. And I think it's important that the VIX has dropped below 25. I was wondering if 25 was going to begin to act as support, and the fact that we're going to stay in this elevated volatility environment a bit longer. But we have broken back below 25, you can see in the past few trading sessions. So if we can put some distance between 25 and head back down towards 20 or even that 18 level, that would certainly be bullish for the markets. But until these B waves within these zigzag patterns become broken and disqualify these zigzags, the fact that they are all set up that way is something that it's prudent to pay attention to them and realize that we're not out of the woods. There could be more downside to come. So I hope you found that informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.